the US claims. You can see here on my charts, hopefully, that we got the dollar weakening into this hour. Euros up here at 121.14. This top chart up here. This one is the yen, dollar yen. Let's have a look at this minute. Let's go through them quickly. So dollars continue to weaken against the yen. We've been down this week. We've moved down. Dollars moved down from the disappointment from NFP on Friday, so we've been tracking lower. Yesterday, dollar yen plunged the weekly low down here at 104.40. We're up a tad on that at the moment, 104.66. Remember, it's a very quiet day. It has been a very quiet day in Asia. It's obviously the Lunar New Year. China's closed today. Japan's closed today as well, not for the Lunar New Year, for a different holiday. Singapore, Hong Kong closed tomorrow. And China markets will be closed for the best part of a week to celebrate the arrival of the year of the ox. So Happy New Year to all my Chinese colleagues and friends. Safaz, good afternoon to you. Hope you're well. Hope you're staying safe. And anything you want to have a look at, let me know, guys. So this is dollar yen. It was down. What else have we got on here? My charts are a bit mixed up here. Can you see these okay, by the way, the black charts? Some people say the black ones don't show up very well, but these are our standard setups at the moment. If you want to change it to make them white on, red and green candles rather than red and white candles. But anyway, let me get back to my charts. Whereas dollar yen, sterling breached key level yesterday on the end of day charts. Mohammed, you're asking about cable. Let me just show you these higher time frame. Good afternoon, sir. It's a bit messy here because this is the 1 hour chart with on the daily time frame, so there's lots of lines on here, so just excuse that for a minute. But you can see the key thing I've been talking about for a while now, this breakout that was this test of this 137.45, 14 days it was testing 137.45, 9 days out of that 13 we were testing it, and then we broke out earlier in the week, and then we've continued through yesterday. Smaller candle yesterday, as you might expect, and we're up again today, 138.40 breach so far. So that's definitely sort of broken out of that. I'm saying definitely broken out of this sideways actually and moved higher. If we zoom that in a bit, you can see the upward trend continue. So the 20-day moving average tested here. This is back in December, January, February, and rallied up here in the last few days since big breakout. So 1, 2, 3, 4, 5 into our 6th consecutive candle to the upside on the daily time frame. So Cable, Mohammed, and Mohammed and everybody else is trading it is definitely on that upside link there. So now then, where we go. Right, I don't want to miss the date when it comes out, but obviously I'll get to your questions as we come. Cooper, hello, sir. Not long time no see. How are you? Your usual plethora of requests: Euro, Swiss, gold, oil, and silver. I'm going to do gold, oil, and silver first because I've got them here. Euro, Swiss. Why do you trade it? Well, I'm not going to say why do you trade the Euro, Swiss. Euro, Swiss. Cooper, I'm sure you're aware, and everybody else is here. Is one of those assets that doesn't move around very much. It's one of those sort of range-bound type assets. Remember, geographically, Switzerland's surrounded by the Eurozone. Obviously, strong economic links between the two countries, but Switzerland vehemently independent and does its own thing. So Euro Swiss, one of those tends to trade in channels. But anyway, where are we? Gold is another one of those that's doing a bit of that at the moment, to be honest, Cooper. It's a bit range bound, as you can see here. This is the 1 hour chart for gold. Remember last week we plunged and broke this big 1800 psychological level. We was down as low as 1780 something, wasn't it? Yeah, and we've recovered since then. But this week, Tuesday, Wednesday, Thursday, we've been very much range bound. So you can see the top of the channel here for gold on the 1 hour chart, right on the R1 today, 1850, big psychological round number, big resistance. And the support is this 200-hour moving average here that's been running all week around 1835. So a $15 channel for gold. It's not trending. The moving averages are flat there on that 1 hour chart. If we go up the time frames, we go up to 4 hour. we see this big move down we had last week under this key 1800 level. 1, 2, 3, 4, 5 candles under the key 1800 level on the 4-hour time frame, but then rallied relatively significantly again into this 1850. You see the 200 period moving average on the 4-hour time frame is right on that 1850 level. So key resistance there, these high time frames. And the daily time frame, again, big move down from January through to February. This February low we talked about we've just talked about that last week, and here we are on the daily time frame. If I zoom this up, you can see another one that's recovering quite well, but running out of steam. See how the candles have slowed down? The bodies of the candles have reduced as the trend sort of tapered out. So we've had this like big move down, and then this swoosh sort of back down. So a big tick here, or a little tick as we crash into 1850, but over the key, big psychological 1850, and we're holding here at 1820. So on the daily time frame, 1820s, the 200-day support now, and 1850s our resistance, but really going sideways. Silver, on the other hand, obviously had the what can I say? Had the Reddit effect, didn't it, last week? So silver here on the daily time frame, we charged into $30 about an ounce, didn't we, from these lows down here at under 24 last week. It's then come back down, and then again it's sort of very much range bound. So it's biased to the upside, as is all some really big moves in commodity markets. The most significant being palladium, cocoa. I noticed yesterday, big move. Silver here, sort of back to 27, really holding to the upside over its 20-day moving average, and intraday 4-hour move up and move down. So it's gone short, then it's gone long, and then it's run out of steam. So again, another one that's really been idling since about the 5th of February here, after that big move on the 4-hour. And the 1-hour time frame was short, and then that's just moved up today. So silver's got a bit of a tick up today. That would have gone long on this strategy here this morning. MACD remains, signal line's moving up. The histograms remain below the zero line. Signal line remains below the zero line, which you can't see because of my head here. Can you? If I move, no, I can't even move that up. Anyway, yeah, just take my word for it. And we're literally right through the pivot point here at 27.12. So not a great deal of action, trending action anyway, on silver, Cooper. Oil continues to bid. It's run out a bit of steam today, Cooper. And I'll come back to Euro Swiss. Let me just make a note of that, and I'll come back to it because there's lots of other people asking for data, and the data's out. So let me just check the data. So initial claims is actually it's actually better than expected. No, why has that gone red? Bizarrely, it's worse than expected. Sorry. So weekly claims now back touching 800,000. It's coming in at 793,000. Expected to be around 750,000. So last week was 50,000 better. This week it's about 40,000 worse. So again, it's cancelling each other out. Interestingly, last week's claims has also been upgraded. So from 779, it's been upgraded to 815. So it's back over, or 8112. It's been upgraded back over 800,000. So 800,000 is definitely, it's still a very, very significant issue. It's a big headache. It was a big headache for President Trump. It's a big headache for President Biden. Lots and lots of stimulus. He's going to throw lots of money out, lots of fiscal stimulus. It's $1.9 trillion stimulus package is, looks like it's imminent. The Democrats have backed it. They're going to push it through without the Republican support. They want some Republican support. Obviously, the Senate's split at the moment with the second impeachment trial of President Trump. But certainly, the economic data is continues to wane. And as I've been saying for a long time, months and months now, the jobless issue, unemployment in the United States is a significant issue. So let me just recap that. So continuing claims also worse than expected. 4.54 million from 4.49 million expected, and 4.69 last time, also upgraded from the initial reading last week. So it's a miss on the claims again. Continues to do that. It's up again, and the weekly average is now it's come down a bit. It's 825,000, but it's still a very significant elevated number And again, the previous number was upgraded by 10,000 on the week to 856.5 from 848. So another significant headache. Weekly claims, people claiming unemployment in the United States, significant issue, and you'd expect the dollar to have weakened on that. So just see that, yeah, the euro there back up 121.46 or 121.50, being eyed by the euro. 121.56 is where R2 sits, as though it's up and over that. Right, let's get back to your request. Excuse me, I need a quick drink of water. Cooper, I won't forget your Euro Swiss, promise. I'll come back to it in oil as well. Oil is just trending high, my friend. Gold, James, we just did gold, didn't we? Hope you're still here. Hope you're well. Nice picture there, James. Who's next? Malik. That's okay. Malik, it's not a problem. Everybody's just saying hello, hello, and you all start talking to one another, don't you? Yeah. Salfraz, we just did gold. James saying... Gold, buy or sell, sir? I don't know. You tell me. It's what your system is telling you to do. You know. Let's have a look at the gold chart. Let's just look at the gold chart. So the daily time frame here on this particular strategy here, we're under the 20-day moving average. We're under the 50-day moving average, so that's weak. Okay, so it's been limping down. We've had 1, 2, 3, 4 days up. But it's run out of steam, like I've just said. By the looks of things, looking at the candles, look at the candle pattern, look at the formation. Big, not so big, smaller and smaller again. But we did just about reach the 20-day moving average. Again, James, it depends on your time frame. So that's relatively positive. We've closed above this big down candle here. It took us 3 days, but we're back over it. We're just about messing about with the 20-day moving average, and we've got a significant resistance at 1850 and the 50-day moving average there at 1858. So they're the two key resistance on the daily time frame. If you go down, again, let me just demonstrate, James, about the issue about what time frame you're trading. The 5-minute time frame was relatively long. It's exactly the same setup, but on a 5-minute time frame. So you can follow the rules. So again, here, the thing that jumps off for me is this downtrend here, and then it went long there. Over the 20 period moving average, the 5 and the 9 exponential moving average cross. So this went long here at 13.45 on the 5-minute time frame on the gold, on this gold chart. So 3 strong candles up. We'd have had our stop loss down there. It's moved up, and that might have stopped us out, but we would probably may have done. Then it's looking to go short there. That hasn't worked out because it's not trending. You can see. Although there the moving averages have recrossed there, and we're back under the 20 and the 50. It didn't happen, did it? Went short, and then immediately would have stopped you out. So you've already stop loss up here, so 2 or 3 or 4 candles behind your entry. So you'd have been stopped out on that one. Then you would have gone long here. So 5-minute traders have been long for a little while, and then they're looking to go short. They're going short now. So 5-minute traders for gold using this strategy will be going short when that candle closes by the looks of things, although the candle's not yet closed. There's still 3 minutes to go. So, James, my friend, it's all to do with time frames and the strategy you're using. I hope that sort of demonstrated that on the gold time frame. But generally, gold is, say, on the higher time frames, gold is generally meandering lower. It had a big shakeout last week under 1800, and it's bounced off that now. As I said, 1850, 1820, that key higher time frame levels. Keely Brown, England. What's all this about? So let you talk about gold. Yes, again, Keely, time frames. Yeah, talked about 1850, 1820 key levels on the higher time frames, and we just saw what was going on in the 5 minutes. Everybody's about gold. Shaif, there. I hope I've answered your question. Good evening, Joseph. Good afternoon, Joseph. I should say. Someone just said a good evening to me. Go ahead. Good evening, Mohammed. Hope you're well. Like your little sign, like your logo, information sign. Where are we? Who's next? Joseph. Good afternoon. Mohammed, can we see Euro breaking 122? Well, the trend is to the upside, certainly, Mohammed. Let's have a look. Gold. This is Euro on the 1 hour, guys. So you can see here, trending higher. This is the 20-hour moving average, the green line here. You can see it all over this key yellow line here, which is our 121 level. So we've been over 121 now, half of Tuesday, all of Wednesday, and so far all of Thursday. So, 2 trading days plus over 121. That data for the dollar wasn't great. We're over R1 already today. We've spiked high of the week, clearly here, 121.48. So the next big line, the standard I've just said, is 121.50. And I'm going to send my colleagues to tell me something. And we can't quite get there at the moment. So 121.50 is your next line. Obviously, if you're going to get to 122, that's the 1 hour time frame. The 4 hour time frame, Mohammed, as you can see, the 200 period 4 hour time frame sits there at 121.53. So just a little bit above the 121.50 level. So that's the next level for 4 hour traders. They've been long. Again, on this crossing strategy here from, where was that? That's the 5th of February. So they've been long all week, basically, 4 hour traders. And we haven't, look at this, we haven't closed under the 9 period EMA. So they're very long. So again, using that, the third option of the strategy that we use on this trend following analysis, you would have got long here on your 4 hour time frame at 120.37, and you're still long now at 121. 40, whatever we are now 42, and just waiting. That's obviously our key. Hang on a minute, we've got 2 red lines. Hang on a minute. So this chart's got a bit messy. I've just noticed 2. Why have we got 2? That's the 200 now. What's that one? That's the 50. On my 50 here is in orange as well. Sorry, so just ignore. That should be blue. That's the 50 period, and that's the 20 period. See the 20 period crossing the 50 from below? That's positive here. And that orange line there, guys, is the 200 period. So 4 hour traders are long, and the daily traders, end of day traders, they would have gone long using this strategy yesterday, not yesterday, day before yesterday, Tuesday, from being short up here all the way down here. We'd taken out there, gone short again there, and gone short, and actually, yeah, that would have closed the short flat. We'd have lost if we'd left it in that long. But also triggered long. So it triggered long here on Tuesday, on the close on Tuesday at 121.17, and we're at 30 pips to the good on that one. Half an ATR. The ATR here, this one down here. Can you see this one down here? I can't because Mohammed's. Let's just get rid of Mohammed's name. Here is the ATR, the average true range. So that's how far this asset will move typically in the last 14 days, because it's the daily time frame, and the ATR now is telling me it's 68 pips. So 68 pips is a typical daily move over the last 14 days for the euro dollar, and we went long here on Tuesday, and again it's got resistance coming up at 121.51, where the 50-day moving average, that pink line is the 50-day moving average. Then the top of the Bollinger Band at that 122 that you talked about, Mohammed. So yes, it's relatively bullish. Okay. Good afternoon, good evening, happy New Year to you all my Asian colleagues. Happy New Year to you. Kili, no problem. We're here to help. Vietnam, hello, Vietnam. Hope you're all well. It's keeping well. Growing very, very aggressively. I've read a very positive report about the Vietnamese economy. Outperforming the Chinese economy in 2021, one of those big growth economies. So all my Vietnamese colleagues and friends, make the most of it, my good people. Who's next? Mush, hello. Kabir, hello. Paul, nobody's asking for stuff. Paul, brokers don't always like to analyse or talk about pound, yen, don't know why. Paul, what are you talking about? Let's talk about it then, my friend. Cable is bid, and cable against the yen, the guppy, is very, very bid. The thing about sterling against the yen, Paul, and everybody else, is I've just talked about the ATR. It's got a big, hang on, let's get rid of Paul's question. Just so you can see the ATR there. Look at let me just make that bigger. So you see there? If I move that up there, you can see this moves around a lot, and it's known as the Widowmaker for good reason. There, can you see that? The ATR, 114 pips, a typical daily move on pound against the yen. Obviously, the spread is a bit wider when you trade an asset like that because it moves around a lot. But the volatility is big, and it can catch you out. So you've got to be careful when you're trading the pound yen, Paul. So and anybody else for that matter. But here on the excuse me, let me just put that there. Oh, you can't. That's even worse, isn't it? Let's go back to that. There we are. Can I put myself underneath? There we are. Actually, there. So you can. That's better, isn't it? You can see the screen's not as big. That's all. But you can see the end bit. You see how the ATR. Sorry, not the ATR. The MACD has sort of fallen down as the trend has sort of bounced off this 145 level here. This is the 1 hour for pound against the yen. Relatively big, sort of, but really moving sideways with a resistance at 145. Didn't get as high as that, so that high's got higher. Higher time frames, there we go. Higher time frames, a bit more trendy. So here the 4 hour is definitely trending higher. See how the moving averages, sort of moving averages, the Bollinger Bands tighten up because the candles are quite small. Sideways action, not a lot going out. Then we break. Then we see how we squeezed there. Excuse me. We've squeezed in here. Then we've moved up. I don't like that. I'm going to put myself back to there. There we are. See the screen a bit better. But you see how them squeeze in. Then we rally up. Then we run out of the top and we go sideways. Moving averages start to go sideways. There's no direction. Then we have a big day, or not big day, a big 4 hour candle. Don't know why, but it doesn't matter. You know, something caused that. Something fundamental might have caused that. That's the fourth. Was that NFP? I don't know. Anyway, big candle engulfing all the previous action for loads of times, all the way back to the beginning of February. Big engulfing candle. That's really positive. Off we ran. We ran to 145. Now we've cooled off that. Ticked under the 20 period movement average. Now we move back up. So again, we're compressing at the top here, which is relatively positive. Okay, so we're on the upside, Paul. I hope we're answering your question, talking about things you said we didn't talk about. If other brokers don't talk about it, well, I will. Okay, my friend. Pound, yen, up here on the 4 hour. 1 hour is a bit messier as we just had a look. And the daily time frame should be relatively positive. There we are. You know, easy breakout here from one. Easy breakout. Can you see the breakout here? See the congestion around this top here? It's perhaps not as clear. Let's zoom this up a wee bit. Again, lots of you lose the content, but you can see here we couldn't break the yellow. This main yellow line here is the 140 line. We couldn't break over it for yonks. This was the beginning of December into January, and we're sort of just breaking out here as we broke into the new year, and it's been a good new year so far for sterling against the yen. Obviously, the deal was done with the EU as far as sterling's concerned, and sterling's accrued relatively significantly. So 141.80, 142 is the next level, and here we are. We've run to 145 now. You can see that a bit more detail. I can't zoom that up anymore. But here, yesterday, we went through and traded over 145 for the first time in a long time. So if we go to the weekly time frame, you can see this. What a strong move we are. If we look at this 145 level, we look to the left, and when we were last here, we were last at 145 all the way back in. This is February. This is the weekly chart for pound against the yen. February, before the election, before the dreaded. No, what am I talking about? I'm talking nonsense again. Just ignore me. February last year, wasn't it? So we're at a year high basically. This is 16th of February. So a 1 year high this week for pound against the yen. So that is bid, my friend, on the weekly. You saw the daily was to the upside here. Last broke over the 20-day moving average back here on the 23rd of December. So that's been fairly bullish. Didn't break out of that channel there really until it held over 140, went under 140. Really, it's here. That's closer to 140, 180. But that was the big day there, the 1st or the 12th of January, and that's continued to rally from that point there. So, Paul, I hope I've answered your question. Again, Paul, tell me if you want to look at this in more detail, tell me what time frames you're interested in. I'll always default to the daily if nobody puts on a particular time frame. And I haven't forgotten about you, Cooper, the Euro Swiss. Don't worry, I've got it down here. I'll come into it in a minute when I get through these people. Oh, we've got a fan here, Paul. Chris is saying, hey, Jeff is the greatest. Well, we do our best, Chris, my friend. We do our best. Well, gold. Hopefully you were here earlier for gold. On the higher time frames, 1820 is key, 1850 is key. Otherwise, we're sort of drifting. Let's just do it again quickly for you. So here on the daily time frame, we've got the 50-day moving average at 1850. and we got support here at 1820. We had 4 days up, but the candles are getting smaller, as I said earlier. If we go down the time frames, big resistance at 1850 on the 4-hour time frame. Support is down here around 1820 now. Now we've just about held up. We can see very vulnerable to 1800 itself. And on the 1-hour time frame, big resistance at 1850. Couldn't hold it yesterday. Bang down about it. And the 1 hour has the 200 support down here at 1835 intraday. So there we go. What's your take on gold right now? Well, there you go, JD. I just talked about gold. So that's my view on what's the market. It's not my view. It's just what the markets are showing me. I've missed somebody out here. Am I back? I'm back. Hello, JD. Gold, hopefully I've just talked about it and you've got that as well. Siabonga, hello guys, would you explain the euro dollar? Well, euro dollar is continues to accrue to the upside. This is the daily time frame. Siabonga, 1, 2, 3, 4, fifth consecutive day to the upside. Once we continued it, we'd shaken out this downtrend here as we went under 120. So 120 is a clear support area. We're now over 121, and 121.50 and 122 are the next upside targets if this is going to continue to accrue to the upside. I said that pink line there is the 50-day moving average, which sits at 121.56. So that's the next resistance level to the upside. To the downside, we've got support at the 20-day moving average, which is around 121 itself. So some key levels there. Sorry, we lost the link now. What do you think about euro yen? Euro Nikki. Not yen. What was I on? Swissy. It's been a great trader over the last few months. Euro Swiss. It looked like it was accruing, or the dollar had bounced quite significantly last week. But as you can see here, this is the 1 hour time frame on for the Swissy, Nikki. But you see, this is the 200-hour moving average, and we're way under that. We broke that Tuesday, Wednesday, Thursday. So our lows again, it's trending lower, but it's smooth. It's sort of flattened out. And where we flattened out, we've flattened out a next big round number, which is 89.8900 is where we're finding support at the moment. Quite a lot of loss of direction. So the trend is flattening. Is it just a sideways action before it goes down, or are we going to go back up? Who knows? But at the moment, it's trending lower. We're still under the 20-hour moving average. Again, this hour it's got weaker with that weaker weekly claims from the United States. Just a quick reminder, it came in at 793,000. Expectations were 750,000, so it's 43,000 worse than expected. Last week was 50,000 better than expected, but last week's numbers have all been revised up as well, so more negatively, if you like. So last week's numbers have gone up to 812,000 from 779,000. So still a big issue. New people claiming unemployment for the first time in the United States. Remember, the dollar weakness was triggered from Friday from that big miss of NFP when it came in at 49,000 when markets had got a bit ahead of themselves. Before the ADP and the weekly claims last week, which were positive, the average consensus on the Bloomberg and the Reuters polls was around about 50,000. They all got upgraded quite quickly following the ADP and the weekly claims last week to about 105,000. And ironically, NFP came in at 49,000, so under the expectations significantly of the new upgraded targets, but under the original 50,000 consensus target as well. So it was a weak NFP last week, and the dollar has sunk since. Other things weighing on the dollar, such as the rally in the stock markets and more risk being taken on, the likelihood of the $1.9 trillion fiscal stimulus from the new Biden administration pumping through. So anyway, Nikki was asking about Dollar Swiss, it's down. Interestingly, the MACD though here remains under the zero line and has done significant, but sort of ticking up here. It's an interesting bit of possible divergence here on the MACD as it's rising and the prices are just steady. Rising, the prices aren't going up or down, but signal line certainly ticking up. Lots of activity on the stochastic as you would expect. RSI is 13 falling, so that's in line. Zoom this up. But MACD's showing a bit of life, given that we seem to have got this floor at 89. So it's a key level 89. If we go to the higher time frame, we did get to 90.30 last week. This is obviously before pre-NFP. And then we've been down for 1, 2, 3, 4 into our 5th day. So that's a good example of the power of the significance of the NFP data on Friday. Big day down Friday, big day down Tuesday, down again yesterday, and down so far today, but into this 89. So you can see here on the daily time frame, 88.50 was a key support area through most of the end of January. Below that, we tested as low as 87.56 as well. So still sort of biased to the downside, but these lows at the moment are high. So we've got a higher low here from here, and that low at the moment is still above this low. So we've got this level to test here, this 88.50 on the daily time frame. Nikki, that's my take on the Swiss franc against the US dollar. Gold, Latif, we talked about. What do you think about Swiss? There we go, Manuel. I've just talked about Swiss. You tell me. Yeah. Agree, disagree? Guys, you tell me. Well, says Nikki. I'm guessing you're saying something else. Sorry, these are just coming in order, so I'm seeing. I'd recall cable, pound against the dollar again. As I said earlier, we're into this is the daily time frame. 1, 2, 3, 4, 5, 6 step to the upside, so it's positive. We broke out of this 137.45 level, which we've been watching for the most of the second half of January and most of the beginning of February. We broke out significantly last week. But it was Monday, wasn't it? Tuesday, Wednesday, Tuesday. It was here on the NFP number again. So big break up for sterling, breaking up 38.40 at the moment. R2 today sits at 38.96 for sterling on the bid as the weaker dollar continues, and that's the outlook for the dollar really going forward. Dr. Sam, good afternoon, sir. Hope you're well. Hope you had your problems sorted out. You were sending me, I can't remember what it was, you had some messages, some problems earlier in the week. I hope they're all fixed now. Good evening. What do you think about pound in the 1 hour time frame, Andrew Kohler? Right, at £1. So this is right. So let's have a look at this. So the daily is up, isn't it? We're up 1, 2, 3, 4, 5 into our 6th day. So the high time frame is definitely up. The 4 hour time frame also definitely up. Big break here. See that it's good. Big candles we talked about earlier here. Post NFP on Friday, and we've been up ever since. A bit of a dip down under 137, and then we've got another leg up here on the 8th, and it's been up and it's sort of cooling out. So clearly here on the 4 hour, you can see there's a bit of a top there. We've got a pivot high put in. We've got our R level. What that R level is, it's R1 today. Today's R1 there, 138.60. That's the peak from a few days ago. We can't get over that. And our pivot point today is around 138.30. And that's really where we've been pivoting through all week. Well, not all week, but since when was that? We breached it here on the 10th. Where are we today? It's the 11th. So yesterday, wasn't it, basically, what we're talking about? Today, we've been pivoting through there, 138.30 here for 4 hour traders. So really sideways action on the 4 hour. Still bid. We're still way above our 20 period moving average. Sits at S1 there. And we need to break under this yellow line here using this trading strategy to close our long trade. So we're still long. So just stay calm, see what happens, see if we move down. But at the moment, we're still long, and we've been sideways for most of today. So it's still bid. So daily's up, 4 hours up, but looks like it's cooling over. We might have rolled over on the 1 hour. So there we are. Indeed, we have. So the 1 hour, you see that 860 area, or 138.55 is where my cursor is at the moment. We've got as high as that 138.60, and that's sort of cooled over. So that long trend here It was taking you out there this morning. No, last night we went. Then it went short. Not for a while though. That closed out there. So you would have closed out flat. That would have been a flat trade. We went short there. You'd have closed out the same price this morning. Got long a bit. And then closed out. So I don't know how many pips you would have taken that on the 1 hour, but you'd have got some there. That's rallied up 197. The ATR is only 13, so you've got 1.5 ATR. So you've certainly got first target on that. Then it's gone short here this morning, choppy this morning, but then it's gone against you again. So that would have taken you out in the last hour because it's only just closed up there. So again, that would have been a losing short trade. And it's looking to move up, but as you can see here, that the 1 hour is compressed, so the moving averages are not doing anything. So we've gone down, we've gone up, we've gone down, we've gone up. So it's zigzagging. It's really an oscillating trade, a mean reverting trade. So the trend has sort of cooled quite significantly today. So that's why that area, that R1, is very significant there at 138.60, and the psychological 138.50, 5 and 0. And the pivot point now sits at 138.31. So a bit messy on the 1 hour. Andrew Cole is not really trending in that sense. Well, it's not really true. It's not trending at all. Well, did you see Swissy when we looked at the Swissy? There we go. Swissy down 1, 2, 3, 4, 5 days. 4 hour also down, trending nicely. And 1 hour, it's moved down but flattened out. They get around this 89 level. I just spoke to who was I talking to the Swissy about? I can't remember now. But I hope we explained that. Kelvin, what's your take on gold? We just talked about gold. Kelvin, were you here? Tell me if you're here or not, and we'll talk about it again. Everybody's asking about gold. 1820, 1850 key areas to watch for gold at the moment. It's really a bit of a sideways action on gold intraday. Here, there's that 1850. There's the 1 hour time frame, which is at 1835. So intraday, 1835 is our support, but it's really sideways action. 4 hour, much more clear. The 1850 resistance here, the 200 period, and that 1820 low from earlier this week. It's there. Obviously, we can see this big break of the 1800 itself on the 4 hour time frame as well. Kelvin. Nobody's mentioned Bitcoin. Okay, my friend. Mohammed, no problem. Oh, hang on. Here comes the spam. Mrs. Lisa Forbes. She's marvellous, apparently. You are Lisa Forbes. Lisa, take your spam elsewhere, my friend. Best of luck. Pound, says Viara. We just done pound, but we'll do it again, as you've asked. Again, time frames ran out of steam here on the 1 hour, but certainly let's actually start the high time frame. So again, 1, 2, 3, 4, 5, 6 days up, daily's up. 4 hour is big, and it's looking still long. The 4 hour, we've just started a new candle on the 4 hour, so we haven't broken under the yellow. So 4 hours long, but you can see the resistance there, 138.60. Viara, hope I've answered your question. Sideways pivoting there, and the 1 hour. A bit messy. So it's down and then up and then down. So we just talked about that, haven't we? Yes, sorry, I'm forgetting what I was. Roger, good afternoon, sir. Hope you're well. Let's all look. Now, Roger always asks about specific time frames and specific things. So what's we having on? 15 minute on the pound. Well, I guess the pound, it's a bit choppy here on the 1 hour. So I guess the 15 minute is probably biased to the downside. Well, it certainly has been here again. There you go. So that would 15 minute traders sterling cable would have gone short at 9:45 this morning. Would have got out here, there, so you'd have made that bit. Look to go long? No, because we haven't broke the 20 period, so you could have gone short again. You could have re-entered your short here at 12 o'clock. It's gone short again into the 200 hour, interestingly, so you might have either cashed out there because you went against you, haven't run into the 200 hour. It's done exactly the same thing, run into the 200 hour, and you've run out, and it's taken you out here, so you've got out here, you'd have got out there, and then you were looking to go long. Didn't closed right on it there. I wouldn't have taken that one. That would have taken you long here. I mean, that was a risky long because it closed. See that candle? It's followed the rules. The moving averages have crossed. The blue's crossed over the yellow, but then it's gone down immediately afterwards. We've been sideways for a lot of that, but that wasn't much of a positive one there at 14.45, and we got a nice big leg up, and then it's come back against you, and that's closed you out if you're using that strategy. That's now looking to go short, but interestingly, the 200 period on the 15-minute is right there as well, so you haven't got much room to move down. See how we bounced off it there. We went under it, but bounced off it quite quickly. So would that be another short? I don't know. It would be this. This would be the consecutive 15-minute candle down. So it's a whole hour down now for cable, which is not a surprise in a sense because it's half an hour before the US market opens. A bit of dollar activity. The dollar got hit because of the weekly claims. When was that? That was half an hour ago. So there we go. Pound had gone up. So that's looking at that's moving down, Raja. So a bit messy to be honest. But watch that 200 period moving average there, my friend. Rajesh, good afternoon. Hope you well. I don't know where you are, Rajesh, but if you're in India, second test starts tomorrow. Hope you're a cricket fan. Oh, there's lots of cricket fans in here today. Great first test. Certainly was if you're an Englishman. India sort of fell apart a bit really in Chennai. See how they get on Friday in the second test. Abdullah, we talked about gold before. Hope you were here. 1835, 1820, and 1850 are the key levels, depending on your time frame. Logic, euro, dollar, remains bid here. So this is the daily on the euro dollar. Logic. 1, 2, 3, 4, 5, fifth day higher. Yeah, fifth consecutive day higher today. Obviously, we can't make any decisions on today because today's candle hasn't completed. So really, we've had 1, 2, 3, 4 days higher. 2 very, very strong days and 2 less strong days. Sort of ran out of steam a bit yesterday, but so far today we're up again. So 4 hours also bid and still long, and the 1 hour a bit more choppy, but run out of steam around 121.36. But we've broken higher again, having had that 20-hour support key there, the 50-hour there, and the 200-hour there. So they're all nicely aligned. We'd like to see them start moving up here on the 1 hour. Strong day today, so 121.50, next line in the sand. As you see on the daily time frame, 121.53 there, that's that purple line there, that's the 50-day moving average. That's a key resistance to the upside, and then obviously the next level is that 122, which would take us all the way back to levels we saw on the 13th of January, so a whole month back. Next. Cable, we just talked about cable. I keep repeating myself, I was asking about the same thing. Addy, good afternoon. Happy New Year to you, sir. I'm sell gold at 18.43.43. Let's have a look. Cable. 4 hours, Addy. You tell me. 18.43. You got that's see what Addy's doing there, guys. He can't zoom that in anymore. 18.43 sits above the pivot point is there at 18.44, so it seems to be rejecting that. See how it's rejected it here on these are the 4 hour candles. So for 1, 2, 3, 4, 5, 6, 7, 8 times out of 9 candles there, we've rejected, or even more really, we've rejected that 18.44, 18.43 area where Addy is. So if we drill down to the lower time frames, 18.43, there we go, you can see it a bit more clearly. See what Addy's doing now in the 1 hour? That's 18.43 through there. So see how he's caught that top? So that's 1 hour, 2 hour, 3 hours, 4 hours, 5, 6, 7, 8, 9 hours. We haven't been able to close over that key area that Addy's identified there, 43.43. And so he's gone short again, just bouncing off that resistance. That's the 1 hour. If we drill down to like the 5 minute or 50 minute, we'll see some sort of pin bar rejecting that level there. That's 15 minute. That's not that clear. Well, there we go. Yeah, that's the 5 minute rejecting it. We burst through it for a while and a big move down here in the last 5 minutes. So if I go to the 15 minute, there we go. Rejected rejecting. So added short there on at 18.43.43 intraday. Via gold buy or sell again. I'll just look with Addy, depending on your time frame. Obviously, intraday, some key resistance around the pivot point at 18.44. Addy's got in a short a bit earlier than that. Gold and pound, please. This is gold again, depending on your time frame. But gold, go back to the daily. Let's see this. Remember, the daily is still up. We're into our 4th consecutive day up. We're down a bit today at the moment. It's turned red since we've started talking. 4 hour capped at the 200-day moving average there at 1850. Big psychological number. But we can't break over the pivot point, which is a bit lower. And as Addy's just pointed out, that 1843 pivot area is providing a lot of resistance today for 4 hour and yesterday for 4 hour traders. And the 1 hour traders, we breached it a few times. That's that 1843.37 we had. That's that 1850, but not for long. This is 1 hour over it tad. Can't break it at all today, so that's relatively negative as well. And that's why perhaps the candle has turned red today. Andrew Felix. Daniel. Gold is good. Yeah, gold's always good to trade. First request for a new asset. I like to keep these new ones coming in because I keep repeating myself on gold and cable and what have you. So pound CAD says Euphora. Pound CAD, where are we? Pound CAD continues to really move lower. This is the daily time frame. Euphora capped here at 128. So a few days over it, but down very significantly. Again, another post NFP move down. But remember, the Canadian employment data was just, or perhaps not, it doesn't grab the headlines. The US employment data does. Obviously, it's a bigger economy of the United States than Canadian, but it's trended lower as the oil price has moved up significantly. So here, this is Friday, relatively positive because the Canadian data was probably in balance worse than the US data. So dollar CAD closed positively on Friday, but for the rest of the week, we've been down. So Monday, Tuesday, Wednesday, Thursday. Actually, I'm talking that's Thursday. Friday was a down day under 128. Ignore my nonsense. But you can see here the previous high here at 128.68 again, and see how the wicks are rejecting that, and then the low, or the high is lower than its previous low. So the highs are getting lower. So we're trending lower here. And as you can see here, we've had 1, 2, 3, 4, 5, 6, 7 days. We've had 4 big down days, 2 up days, but the trend is lower. We're under 127 now. And the next levels to look to the left. Where did we get to last time we were down here? Well, look at that big support there. And that's where S3 sits today. This low here at 120, it was 127 something, wasn't it? No, it was 126.30 was that big support that we found back in January here. So for 1, 2, 3, 4, 5 days, we closed right on this 126.30 where the S3 is. So watch that 126.30 level on the higher time frame for dollar CAD. Intraday, so that's down. 4 hour is down, excuse me. Last went short here on the 5th at 12 o'clock, 4 hour traders, and that's continued to unwind. And you're still, no, you would have closed out there and gone short again there. This morning at 8 o'clock. If you've added to your short positions, that's still trending lower. So daily's down, 4 hours down, 1 hour down sideways, and then restarted it short this morning at 7 o'clock on the 1 hour time. So that's still short as well. Dollar CAD 1 hour remains to the downside, trending lower. Apostle, Sandy, pound, cable. What do you think about when we'll get back to 135? Well, it's definitely bid, I'm afraid. 135 is a long way to the downside. So we look at the daily time frame. 135 on this chart is all the way. That's 136 here. 135's down here. We don't really know, but at the moment that's a long way from where we are, and it's trending higher. I don't know if you're saying that because that's where you got us. I don't know where you got us. I don't know. That's where you went short or something, and you're suffering badly. But 135, big round psychological number, and that was it broke it, and then it's hung around that area for a while. But we're we're closer to 140 now than 135. 138.28 as we trade at the moment. So who knows when we'll get back to 135? But markets tend to go up and down at the moment. We first broke that key 138 level right at the beginning of the December and then messed about with it. Confirmation of the trade deal helped us break through it and rally 136, 137. And now 138.25 we trade today. So very much trending to the upside. Raji, you got your 15 minutes, don't you? So, right, here's cable. Daily, up. 4 hour, up, cooling down. 1 hour, up, cool down, chop down, 15 minute. Bit choppy. We've just done this, haven't we, Raj? I think we've just done this, haven't we? Yeah, so that's gone short. There we go. That went short in that last candle. But as I say, it's would you take that short? Well, it's a big candle. It's down. It's closed on the 200 period. So maybe it's the third time it's done it today. So give it. But it's recovered. We'll see. But that's the rules say that take you short. But if we go up the time frames, the 30-minute is messy. But so looks like it may go short. It may move you down. The lower the day is down there at 138.12. Who knows? Using that, I don't know what strategy you use, but that's messy. That for me at the 15-minute because it's gone sideways. It's gone down and it's gone up and it's gone down. It's not so nothing. I wouldn't get too excited about that. What history is showing us is it's targeted that once and then went back through it. It went through it again, then went back up through it, but not as higher than it did the first time. Big move down through it this time, much bigger candle than last twice we broke it. So there may be some momentum to the downside, but we've already been down for an hour, so there may be some support down here. Who knows? Where are we? We're at the pivot point. S1 is below the bottom of that 15-minute Bollinger Band there at 137.98, below the key 138.9. There you go. You see how bit of sideways action that is. So yeah, difficult call that one. Emmanuel, good afternoon, good evening. I don't know where you are in the world, but I hope you're well. Stay well. Dr. San, hello, my friend. Problems automatically sorted out today. I could register for future webinars as of February. Very good. It was webinar registration, wasn't it? Good. I'm glad that sorted itself out. What do you expect from cable, says Emmanuel. Cable, we just talked about it, my friend. Here on the 15-minute, sort of chopping around its 200 period moving average. Last twice today, it's gone under it. It's bounced off it. It's broken under it now. It's not gapped away from the previous candle, but it's under. You can see how it's significantly gone down. Here it went back up. So it looks like that may be drifting. Next support might be that bottom of the Bollinger Band here on the 50. I'm talking about 15 minutes here, guys. The 15-minute is there, 138.13. We've been down for an hour plus already. Higher on the 1 hour time range. Again, a bit messy, but seems to have got some support around about there, 138, 17, 16 today. We spiked lower than that. We went to 138.12 or 138.13. Yeah, that's not trending. It's but on the higher time frame, it's pretty clearly still up. 4 hour, was gone long there, gone long again there. Looks like it's we may be closing out, but that's the beginning of a 4 hour candle, and it's only 15 minutes into it. So patience, my friends. Investing in Bitcoin is a good miner. Oh, Lisa Forbes. Get to Lisa Forbes. Very good, Lisa Forbes. Very good. Good luck with you, my friends. Just hope for it to sign. Yes, there are bonuses in love. I can't keep up with them, to be honest, all the time. The marketing guys are changing it all the time. The sales department changing it all the time. Get onto the website, see what's available. Make sure you understand the bonuses. There's different types of bonuses. Read the terms and conditions, understand what they are, understand how they work, understand how they work when you're winning, understand how they work when you're losing, my friend. Andrew, James, did we do gold for you? Seems like hours ago now. Or have I gone backwards here? No, it's 19 minutes ago. James, I think we did gold, didn't we? Hopefully you were still here. Or have you gone away and come back? Silver, silver. We looked at earlier a while ago. Ran out of. Let's go to the daily again. Obviously, we had the Reddit rally to $30. Then we've gone down. Here on the daily time frame, we remain relatively well bid. We're over the 20-day moving average, and that sits down there at S2 at 120. 26.38 is where the bottom of the Bollinger Band sits now. So this is the big spike. Intraday spike to $30. Big shakeout the following day, but very strong move up. And now we've gone sideways, basically. So we're pivoting, literally pivoting through today's pivot point around $27. So that is not trending, unlike a lot of the other commodities I could talk about. MHB on a daily basis, but it's relatively big because it's still over the 9-period moving average. It's hanging on to the 5-period moving average, and it's above the 20-day period moving average. But it's sort of very sideways action, isn't it? If we go down the time frames, the 4-hour from this rally till 30 came down quite aggressive, and then it's moved up, and now it's moved down. It's gone short, now it's moved up. But you can see we're going sideways, as I said earlier. And the 1 hour will be just as messy, trending a bit. That went long this morning, silver, but it can't really breach the pivot point at 27.10. We did get as high as 27.27, ironically, today, but then it ran out of puff, and it's gone really it's directionless intraday, to be honest. MHB. What's your take on euro? Euro is bid primo. It's had a strong day. It reacted quite positively from the week wages number. So this is the daily euro 1, 2, 3, 4, 5th day higher into our 5th day higher. 1 hour up quite nicely, which ran out of steam at shy of 121.50. So we turned down from 121.50, 124.50, then 122, key to the upside in the higher time frames. Today, we're over R1, but now back over R1, so it looks like we're running out of steam. Euro potentially. Pivot is the support at 121.30 primo. Raj is having a break. Very good. I'm just going to have a quick sip of water. Right, man, no problem. That's what we're here for. MHB, cable 50-minute if closed below the pivot point, and I'll sell for take profit S2 today. Very good. Best of luck, my friend. But, luck shouldn't come into your trading, guys. I'm saying best of luck. As I say all the time, have a system, trade your system, bag your winners, accept your losers. It's as simple as that. You just got to accept losing trades, guys. That's one of the big problems most traders, regardless of their experience, find very, very difficult. Because remember, winning trades, losing trades, they don't come along in nice little pairs or evens. You'll get a glut of winning trades and you think you're the man of the world, top of the world. You get a glut of losing trades and you think you're absolutely useless and you can't do this and you're not going to do it anymore. Just deal with it, okay? Keep the losing trades small. And, I know it's a very old adage, but, the winning trades, potentially will take care of themselves if you've, got an edge, if you understand what's going on, if you understand yourself. Okay. Roger, US 100 smaller time frame, 16 minutes. I haven't got, this is a MT4. I can't do 16 minutes, Roger, but let's have a look at USA 100. Let's do 15 minutes. 15 minutes on the USA 100, the NASDAQ, trending higher. Certainly nice big candle there. When was that? Was that yesterday or today? I don't know when that was. That's a nice big candle there. That was this morning. That's gone long. Thank you. But again, yeah, see how that? There's the 50. I'm going to check that these colours are correct. Change the colours on that. So 50. Yeah, that's the 50-hour moving average. That's the 15-minute chart. That's the 200-period moving average. So sideways, strong candle here. Not a lot of action till futures got a bit perky this morning, 10:15, and that's been long ever since. Taking long, taken out there as it's closing on the 9 period, long again a little while ago. So that's 15 minutes gone long there at 14. 14. You'd want it to break higher. It has done. Now it's come back down. That's taken you out there. So that's flat trade, but that's still relatively well bid down the 15-minute, supported by the 20 period moving average. So see what happens as the markets open. Raja, in 5 minutes now. Cash markets open in 5 minutes. So watch the impact of that. Shah, we've looked at cable loads of times. It's bid to the upside. Are you talking about NASDAQ? Yeah, NASDAQ will be testing previous highs. Yeah, it's looked like a positive start. If I get my, I need to get my cash site up, see how it opens in a minute. I lost my money with this stupid stuffs. Levi, talk to me. What's your problem, my friend? Avoid this. Avoid what, Levi? You got to... Levi and anybody else trading, you've got to understand yourself first and foremost. That's why there's we have our disclaimers and our risk warning. It's a very risky business. You've got to understand what you're doing and understand the basics first. If you've done some homework, we're here to help, Levi. That's what we do these sessions. So lots of people lose money doing this, Levi. Lots of people have losing trades. Everybody has losing trades. You've just got to get it right. We're not scammers. We've been in business over 10 years. We're regulated. We're registered everywhere around the world, and we're real people. I'm not a robot. I've been doing this for a long time. Our directors have been doing it for a long time, and we're very proud of what we do. So I'm sorry you've lost your money, Levi, but we're certainly not scammers, my friend. So if you want some help, come to our website, come to our education pages. Understand yourself first and foremost, guys. I say that all the time. Cooper, you've been very patient, my friend. I was looking at the rand yesterday, Cooper, first time in. But let's have a look at the euro Swissy for you. You've been very patient and not said anything why you were first in. But I did have a look at a lot of your stuff. So let's have a look at euro Swiss. It was, wasn't it? Euro Swiss for our friend Cooper. Euro Swiss is here. Right, so this is the weekly chart for some reason. I don't know why, but as you can see, I was saying before, it doesn't really do very much. It's biased to the upside, you'd argue, here on the weekly time frame, but it's not that exciting, to be honest, Cooper. But if it rocks your boat, that's, trade what you see and what gets you going. So 108.50 is a key resistance here on the weekly. Daily for Euro is a bit messier. We're sort of yuck. That's really sideways. That's not something I get out of bed and get very excited about. Excuse me, but we've rolled over, I suppose. We're down. We're down here. Let's take that Fibonacci. There's loads of stuff on here. Let's clean this up a bit. So yeah, 108.50 high that we went back to. I suppose it's a bit interesting actually. That's rejected that high there. When was this? This was the 8th, and then we've been down under the 50-day moving average onto the 20-bit and sort of bounced off it today. So yeah, a bit messy. The moving averages are non-aligned. They're not trending. It's sort of very much sideways action, but really, what I could say here, the 200-day moving average sits there at 107.70, Cooper. The 20-day is below the 50, so it's not aligned, and that's 107.90, so 108 to call it, basically. So 108 is our key support here. The 50-day, 107.96, so it's not quite 108. So 108 is where it's struggling, and, getting lower, but key support there. Nothing... Lost me, to be honest, Cooper. That's not really that's just chopping about, as it tends to do, unfortunately, the Euro Swiss. It's not really trending. It's not a trend followers sort of pair. As you can see with the MACD, look at it, up and then down, up and then down, up and down. Nothing too exciting on that, I'm afraid. Let's have a look at the rands. Let's have the rands a bit more exciting. I've got Euro rand. Do you want to look at Euro rand? No, dollar rand. Let's look at dollar rand. I noticed The other day we'd gone under 15. Was it the other day? Dollar rand. Yeah, here's the daily. There's 15. So when did we breach that? We breached that beginning of February. So it's been a weak February again for the dollar. The rand and other emerging currencies are doing quite well. Obviously, the economy in South Africa is not doing great. There's the issue with the AstraZeneca vaccine. I'm not going to harp on about that, but seem to be Witwatersrand University and Oxford University relatively ineffective against the South African strain, which is obviously the big problem in South Africa. So dollar continues to weaken against the rand, and we're down here. Interestingly, we're at 14.62 at the moment, and we're back to these lows at the end of 2020. So the low we got to is this area here I've highlighted here at the bottom of this last leg in the Fibonacci leg up here at 14.52.20. So that's the next leg. And today, it's just below the S3 on the daily trend line. So again, of this move down, what we've had all of February, we've been down for 1, 2, 3, 4, 5, 6, 7, 8, 9 into our 9th day trading day down, and 7 of those 9 days are finished lower. Well, certainly, obviously today we're lower again, but not counting today. 6 of those 8 days are lower, so significant trend to the downside with big support. Our next level down is at 14.52 level, where we got to here at the end of December. So from the rally to 15.64, we've moved back down and breached that key 1.8 Fibonacci level on the way up. We breached it here. When was that? That was the 5th, and then we moved down significantly from there. So levels playing out quite nicely there, and that's moving down today. I'm running out of steam a bit here, guys. I hope you don't mind. I'm a bit tired now. I've been here an hour or so. On a larger, like a daily basis on the EU. Primo, on a larger basis on the euro, the euro's long against the dollar, and at 121.50 and 122 are the levels you'd want to be looking for to the upside. 121 is now the support for euro dollar on the higher time frames, my friend. Kindly tell us about pound against the dollar. Will it down or high? Today it's been up. It's over 138. Again, it's another one that's bid. We've got the weaker dollar, but recently, literally while I've been talking, it's now I've lost the connect again. So pound on the 4-hour time frame, sort of topped out, as we said earlier, sort of rolled over, and currently, I mean, again, if you're trading this, you've gone long there, you'd have got out there, you've gone long there again at 137.36 on the 4-hour time frame, and you'll be probably, this is currently testing testing this yellow line here, which is the 9-period moving average, which is our get out when we've been trending this higher. So again, if you've been trailing your stop loss up here, so a few 3 or 4 candles behind, your stop loss would be sort of here at the moment, down here. So you might have been spiked out in this hour, but certainly if you've been long, it looks like it's topping out. Resistance today, 138.62 to go higher. That's the daily. That's the daily R1, and the pivot point today, which we're currently under at 138.32, and support is S1 there at 137.99. So 138, a key support level. Simone, good afternoon. Good afternoon to you, Simone. How about pound? What will possibly happen in 1-hour time frame? So let's have a look at the 1-hour time. There we go. What is happening in 1-hour time frame? Well, it's choppy, basically. It's run out of steam, as we just saw on the 4-hour. So the problem with this is it's not directional now. We had a nice trend here, didn't we? Tuesday, as it started, as it broke out, most of Wednesday, and then we slipped into the close yesterday. We've gone long this morning. We went short earlier, as I just talked about, and now it's messy on the 1 hour. As a trend follower, that's not trending, is it? It's run out of steam. You may want to look at mean reverting strategies. So, as I've just said, the resistance or significant resistance, which we haven't got to in the 1 hour, is all the way up there, and we're literally rolling through the pivot point. Okay, right. Positively, you could say, well, the lows today have sort of we punched our low earlier today, didn't we? Punched our low this morning down here, 11 o'clock, 10 o'clock, down here, as we went into the bottom of the bottom trend. 138.15 was our low, and we sort of tried to track higher ever since. However, we haven't broken higher, have we? We haven't broken over that candle that went down, so we haven't broken over 138.39. Went to it once, and now we're going back down again. So that is sort of probably biased to the downside if we continue to close, if this hour candle, which has still got 25 minutes to complete, closes below that trend line. That's sort of negative. We could perhaps test the low of the day, 138.15. American market is just open. The cash market in America is just open. Let me just quick check my terminal and see where they've opened. So doesn't want to work. Always does this when I'm live, and my icon terminal seems to not want to work on open. Sort of flattish open for the equity markets in the United States. Sterling, these highs, guys, let me just reiterate, these are sort of April 2018 highs we've got to as well. So we're relatively well bid here for sterling, but the trend remains to the upside. So you would expect, having got to these April 2018 highs, which are nearly 3-year highs, you'd expect a bit of a cooling. So that's what I'm looking at. That's what I'll be looking at today, Simon. That trend line there from this morning seems to be breaching now. But on the 1 hour time frame, we can't tell. But we're under. What the other thing? I can't see it up anymore. We can't get over and close over the 20-hour moving average, can we? We did it 3 hours up there, but then that looks like to be moving shorter again. But here you can see the 29 and the 5 are aligned, but they haven't crossed to go down again. But we've rejected the 20 hour, so that's looking relatively weak over currently on the 1 hour time frame. Okay. That was Simone, wasn't it? Good afternoon, Mohammed. Hang on a minute. Let me just close my icon terminal. It's gobbling up the connection. I hope you can still see me. Who's next? Mohammed, good afternoon to you. Mohammed. Lots of Mohammeds wishing me good luck. So, Ibrahim, good afternoon. Ibrahim, good afternoon. Oh, you've filled my... Roger's back. What's Roger saying? Already done this on the 150 minute. Oh, we've done it. Oh, hang on a minute. Where are we? GSAT comp account. What's all that about? What about the weekly claims? Will Dixie show up? Dr. Basand, you missed the weekly claims, my friend. That was ages ago. Weekly claims. Oh, you see, you think it's positive? No, it's weak. Let's have a look at the Dixie or the dollar index. It should be weakening. Yeah, and indeed it has weakened, my friend. The weekly claims, Dr. Basand, was weak. Let me just recap the data. The headline number came in at 793,000. That was worse than expected, 40,000 worse than expected. We were expecting about 755,000 new unemployment claims for this week. The previous week was also upgraded to 812,000, so it was worse than first expected last week. The continuing claims also missed at 4.545 million compared to just under 4.5 million, so it was worse than expected as well. And the 4-week rolling average of the initial claims is also higher at 823,000 as well. So it's a relatively negative jobs outlook, and therefore it's weighed a bit on the dollar, meaning that probably the interpretation of it from the market is that the stimulus package is probably even more likely to get through, even more likely to be, there's 1.9 trillion and to the higher side rather than the lower side. So that would put more pressure on the dollar. Yields have probably tipped down again. They closed at 112 yesterday, 1.112, 1.2 yesterday from as high as 1.20, the 10-year yields on Monday. So dollar index here is down, and we're testing S1. I'm zooming up a bit so you can see the 1 hour time frame. We tested S1, this S1 level from yesterday, obviously creates this S1, and we've been as low in the hour of the data at 90.23. It's tried to move up, but again, it's capped at the pivot point there at 90.36. So dollar index continues to trend lower. Kelvin, next. Reply to poll. Really? Okay, I don't know what you guys are talking about. It's very good. 15 minutes on what, Raja? 5 minutes. Did we do? We did 15 minutes, didn't we, Raja? If not, ask me again. Johnny's asking about gold. I'm talking about gold for about 5 minutes, which is fair enough. Everybody likes trading gold, don't they? Especially this time of the year. It's normally quite the Asian New Year or the Lunar New Year. This January-February window is normally quite positive for the gold market, and it hasn't been this year. But it's not a normal year, is it? Given the pandemic, it certainly wasn't last year. So the daily time frame has been a bit perky into the Lunar New Year. Oh God, that's messy, isn't it? So we've been up for 4 consecutive days, but running out of steam. Why do I say that? Because the candles are getting smaller. Look at the candles. 2 big down days here as we went down, and it's taken us 3 days to recover that 2 down days, but currently negative today. So we've run out of steam. I couldn't get and hold over 150, 1850. We drill down to the intraday stuff. So that's our key resistance on the 4 hour time frame is 1850. And as we talked about earlier when we were looking at what Adi was talking about, 1843.43, he was saying he was short from, and you can see why he's done that. See these 4 hour candles, nothing closing over that level, 1843, 1845 level. Wicks certainly into the time frame, but the close of the 4 hour time frame hasn't been able to move above that, so fairly comfortable short at that time frame, depending how long he's holding it for. But overall, the 4 hour time frame remains relatively well bid, but again, like the daily, it's run out of steam as we've ran into this area around this 1845 before we get to the 200 period moving average at 1850. So that's definitely needs to break above that for a test of this 1850. Tried it once in all this time, all these candles here, but it's still relatively weak. But again, also still supported by the 20 period moving average here on the 4 hour. Negatively, though, the 4 hours coming up to the price action, so a bit of a break perhaps is imminent one way or other here on that 4 hour time frame. Seriously, I just finished blowing my account right now. I don't know what to say, my friend. World, you need to have, don't feel like a loser. You know, people blow accounts all the time. I've done it many times. It's all part of the learning curve. Why did it happen? Why did it go wrong? Why did you blow your account? Did you understand the leverage that was on your account? Did you understand the market you were trading? Did you understand the time frame you were trading? Did you understand the spread, the margin? All these things, you've got to really get your head around all these basics, world, before you risk any more money. So have a look at that. Go back to a demo account. Go back to finding a system, a strategy that works for you, my friend. Because just because you've blown an account doesn't mean you're a bad trader. You know, all the world's best traders have all blown accounts. Read about any of the world-renowned traders, the world-renowned fund managers. They've all blown accounts in their history. If they haven't, they're telling you a porky pie, to be honest, and they're not worth listening to, in my humble opinion. Anyway, Aussie. I haven't looked at the Aussie today, but Aussie, another one that's is bid. The Kiwi, the Aussie, bid against the US dollar. Here we are. This is the 70.77 level. Again, another significant level, historically quite high. So the 77 was broken here on Monday. So Tuesday, all the day over 77. Wednesday, all over 77. And here we are at 77.65 R2. We've got the high of the week getting posted for the Aussie dollar and continue to track higher. This is the 1 hour time frame. We've got the time frames this time, so the down time frames. 4 hour time frame, even more bullish. Look at this. It's rally from 67 on the 4 hour time frame into the end. This is the end of the 5th last week, and we spiked up really aggressively. Nice big strong candle here. Post NFP here last Friday, and just rallied away stalled a bit here at 77.40, and then next leg up as we've broken out of that congestion there. Today, in fact, strong day today. 77.65 into R2, and Aussie keeps moving. Next resistance is R3 there at 77.86, which takes us all the way back to January the 21st top there, 77.81. So Aussie nicely bid against the US dollar, 1 hour, 4 hour, and the dailies even more well, as a significant bounce as the 4 hour here from that move down to 76, which took us back to these resistance areas. See again, see how we were tracking up, that became resistance, we broke through it and off we go, and that became support. So that resistance level here back in December as we were moving up became support as we came down into February, and for 1, 2, 3, 4 for the last 5 days we've closed up significantly on 3, down yesterday, and it looks like a significant close today to the upside as well. But as you can see, our resistance sits through there. There's some shorts perhaps going in at 77.80, but we break out of that high there, that high back to January at 78.17. So intraday we did break 78. We haven't actually closed over 78 for the Aussie dollar. So I'll just make that line a bit thick, and we'll go up the time frames and see how strong the Aussie is here. If we go up to just put that 78 in, there's a nice big thick line so you can all see it at 78. Having broken 70 or dot 78, I should say, having broken 70.77. What am I do? Okay, close. So let's go up to the higher time. So we've got the weekly time frame. See this 78 off the chart. Where are we? This is back to January last year. So multi-year high. So if we zoom in, it'll get a bit messy, but you can see my point, can't you? Here we are. This is December 2018. And here we are, 78. Remember, in March, we went all the way down here to 55. So it's a huge rally that's continued here. So 78, where's that taking us? It's multi-year high. So let's go to the monthly time frame. Zoom up a bit. You can see where we are. There it is, 78. It's the 200 period monthly resistance, and that takes us all the way back here to February 2018. So do the maths. 3-4 year high for 3 year high, 36-month high for the Aussie against the dollar as 78 approaches. So nicely bid euro today, Aussie today as well. Let's just get the rest of these questions. Why aren't you stuck to your strategy? Well, Taipan, my friend, you took the words right out of my mouth. Well, I don't know if you know, my friend. I mean, even Taipan, even with a strategy, you can still end up blowing an account. There's lots and lots of strategies. You've got to find a strategy that works for you, fits for you, and multiple different strategies for different time frames, potentially different accounts for different time frames, different approaches for different time frames. It's all about you guys finding something that works for you. Continuing to get a link to trade in your platform. I've seen 100 messages with restart. Oh, have we? Very good. Thanks, Stuart, for the answer. So it's not a problem. Thank you for thanking me. Aussie CAD, something different, Lexi. Thank you very much. Let's look at something different. Aussie CAD. So again, both, let's just, we've seen the Aussie is up against the dollar and relatively bid. CAD's up against the dollar as well and relatively bid. CAD's getting supported by the oil price. So what's that doing to that pair? Are they cancelling each other out? What are they doing? Let me have a quick look. I just saw some messages here. No, it's okay. It's my colleagues. What are we doing? Aussie CAD for Lexi. Aussie CAD. Let's have a look at Aussie crosses. Australian dollar is here. So these are the main Aussie crosses on the daily time frame. We talked about this a while ago. We put in these what looked like downtrends, which was nicely fixed, and we've broken it. So the Aussies turned higher. Down there, turned up through that, supported up, turned up through that. So Aussie CAD says Lexi. Time frame, Lexi, my friend. I've just got a great big spam message. Go away, you spammers. Lexi, are you still here? Lexi, time frame. Lexi, let's have a look. Right. So let's zoom this up. So this is a trend line we put on a white, which is still relevant, isn't it? So here we topped out here January 98, 88. So we couldn't quite get to 99. So let's put the round number 99 on here. So dot 99 is just around about there. It's just 2 pips over. So 99 is that big yellow line there, Lexi. We've been tracking up here for most of December. Zoom that in a bit. You can see we've moved up quite nicely. Break of the 20 period, dip, 50 period held, another rally up through there, 96, 97, 98, and then 99 topped out. Looked like we were rolling over, doesn't it? So let's just extend that trend line. Let's make that blue again so we can see it. Make it that big. What is it? It's aqua, isn't it? Okay, so that was our high here, just shy of 99 at the beginning of January, and then we trended down. We broke under the 20 period. Didn't look like we were. Let's zoom up. You can see last time I've looked at this, so it looked like it was moving up. Then there was this big down candle here at the end of January, so we went down again into the 50 period, and yet again, just like we did here at the beginning of December. The beginning of February, we bounced off our 50-day moving average. So 50-day held really well there. It's held well again here at the beginning of January, and then it's triggered back over the 20-day moving average. So we've had 1, 2, 3 days up. 4th day, we broke the 20-day moving average. 5th day higher, cooled on the 6th day, and now the 7th day. Now, you see this trend line we'd identified at the beginning of January, we're breaking that trend line. So this looks relatively strong. Once we've bounced off the 50-day moving average. 2, 3 days ago, 4 days ago, we broke the 20-day moving average. And here we are trying to break this downtrend line here. So is this another attempt? Well, possibly. What we seem to be doing also, though, now is sort of a bit of a sideways action. So that's the bit of a downtrend, but that's a support level here from the 50. So we can see the trend line and the aqua line here. And the dark blue line here, the 50-day moving average is moving up. So we've got this triangle that's coming to a point. So are we breaking out to the upside, or are we going to break out to the downside? Well, we supported the downside. We didn't break the upside here. And looks like it's moving out. So we need to break over this, where we are now. We need to close over R1 today to break this downtrend line and suggest we may be moving to the north. However, negative to the upside is the fact that the Bollinger Bands have compressed and they're sliding sideways. See that's going sideways now. 20-day, we're over it, but it's going sideways. 50 is still sloped a bit tad, and the bottom of the Bollinger Band is coming in. Pivots have, parabolic stars have flipped to the south, so that's relatively positive. But they can flip around quite a bit. So yeah, possibly to the upside, but certainly big support here is the 50-day moving average. Close support is the S1 and 20-day moving average at 97, 95, so virtually 98 itself, and then 98.35 as we trade today. So a bit messy. The down leg is over by looks of things. Well, it is over because we had a big shakeout. Didn't break through the 50, so we've got more strength here. So the Aussie, strong currency once again from this down leg, possibly. But again, remember the CAD supported by the strong oil price. But how long can that keep going? We've broken $60 on Brent. We still hold over $61, $58 is held on US oil. So again, we'll see. But that's looking like that's trying to move to the upside. Lexi, my friend, so intraday will be a bit more interesting. Yeah, bid here earlier on the 4 hour over the remember this is our daily trend line. We're over it now. The 1 hour probably also, there we go. Also a bit spiky over it, but came back. So maybe getting a bit stretched, but certainly some nice strong support today here by the 20 hour, 50 hour. So we've got 20, 50. daily trend line we're over. Yeah, it looks a fairly decent break in the last hour or so to the upside. Hope that answers your question. It's quite analogical, says Kenneth. Analogical. What do you mean, Kenneth? What is trading? My analysis? Kenneth. As with anything, have a system, trade your system. Accept your winners, accept your losers. Most people can't cope with losing is the big problem. So anyway, unless you're speaking to one another, Bobby Cole is asking about how can I go about it? I don't know what are you talking to me, or are you talking to this guy here who's spamming me with his telephone number and his WhatsApp number? I think that's it, guys. There's no more questions coming in, and I'm really quite tired now. I've been here near an hour and a half, so I'm going to call it a day. Let's go back to the main crosses. It's nearly 5 o'clock my time. Let's go back to the main crosses of what's going on. We've had the main news today. Let me just quick scan. Yeah, there's not a great deal left to come today. Overnight, we've got business PMIs out of New Zealand. Tomorrow, Friday the 12th, it's UK day. We got GDP. We got some manufacturing production data. Lots of factory data out of the UK tomorrow. We've also got the national the balance, basically the borrowing out of the UK tomorrow. We got Swiss inflation as well tomorrow. Inflation data in the US again was quite disappointing yesterday. It came sort of in line with expectations, but was relatively disappointing. So I'm going to call it a day at the top of the hour. So we've got a couple of minutes left. Let's just quickly go through what the main crosses are doing. So euro remains relatively well bid. It's come off to 121.50. Dollar yen. Dollar remains weak here, but again, just literally pivoting through the R1 level there and the 200-hour moving average and the support down here at the pivot point for the last few hours. So that's the key range for dollar yen traders. Here on this 1 hour time frame. Sterling again remains big but a bit messy here. Looks like it's breaking. It is breaking lower. This is the 1 hour time frame. Remember, it's 5 minutes for that to close, but that's broken that. So that may be moving to the bottom of the Bollinger Band there and the S1 level. So cable sort of starting to move down again. The Aussie, as we just seen, up into all the way to R2 and down. Kiwi remains big. CAD has got some legs. Got some legs trended lower, maybe turn around. So there's a bit of dollar buying going on at the moment in this current hour, sort of ending perhaps the down leg of the day. Swissy we talked about earlier as well, just literally pivoting through this 89 level. Not a lot of action going on there. Bitcoin, I always ask about Bitcoin today, which is a bit unusual. Bitcoin here on the 1 hour time frame. It's had a strong day. Bitcoin here, 47,900 again. Testing on, in fact, we've been over 48,000 again. So another strong day for Bitcoin here, strong candle here, testing and breaking 48,000 yet again. Gold continues to get capped at the pivot point here at 1845, and US oil down from these highs yesterday, but still very well bid at 58.50. Look at the daily time frame for oil, trending very strongly and nicely from this $52 base in January, and a strong February for the oil market thus far, therefore perhaps supporting that oil market as we talked, the CAD as we talked about earlier. So I can't see any more messages. Looks like they've all dried up. So thank you for your time, everybody. Take care, trade carefully. If you want to contact me directly, email webinars@hotforex.com is the quickest way to get hold of me. Until then, trade carefully, and we'll see you all again tomorrow. All the best, everyone. Take care. Bye-bye.